Welcome everyone. Today we're going to talk about the different funding sources, okay? And then we're going to focus on the most important ones. Pretty much, I identified 10 sources of funding, but we're going to focus on the most important ones, and we're going to talk about the differences very quickly so that you fully understand what your options are when it comes to purchasing property. So this is going to depend on your exit strategy and also on your experience on personal FICO score, okay? So depending which strategy you're gonna use, but I'm gonna highlight the ones that I highly encourage you to take advantage of. Okay, so let's dive into it. What are the 10 different sources for funding? So why are we concerned about funding? Because when you get into real estate, you're gonna need three things to be successful. You're gonna need a great deal, you're going to need to understand basic analysis, and you're going to need to have funding. And guess what? Funding is going to come easy if you have a great deal, okay? Because right now, due to the pandemic and the shortage of inventory, there's more money to be lent than deals to be funded, okay? So if you have a great deal, guess what? You're going to be able to get funding like no time, okay? So now let's dive into it. Let's start with private money lending, okay? And I'm going to put a star for those sources that are my favorite, and I'm gonna tell you why. So we're gonna cover these two because they're very similar, private money lending and hard money lending. When do you use that, and how do you go about getting that, okay? So private money lending is relationship-based, okay? So what it means is that you have investors who chose to be passive in real estate. So they have a lot of money, but they don't want to invest. They just want to lend their money in exchange for a high return, such as 12%, okay? Now, the reason why I really like this private money lending is because they can finance 100% of the purchase and 100% of the rehab. So you're going to be like zero money into the deal. In fact, right now, we have two outstanding loans from our Chicago CASHFLOW private fund, okay? So it's funding two of our deals, and they pretty much we had zero money in the deal, 100% of the purchase and 100% of the rehab. Now, how does that compare with hard money lender? Hard money lender is an institution, okay, versus an individual. So this could be like John Doe. This could be your neighbor, could be your family or relative. But hard money lender is going to be a big institution, usually backed up by hedge funds, and they're lending tons of money, and the rate is about the same. So you're looking at about 12% interest rate in these two. They're going to help you, again, with the purchase and the rehab, 100% of the rehab, but not 100% of the purchase. So right here, you get 100% and 100%. So this is purchase and rehab. In here, you're going to get probably 85 to 90% of the purchase and 100% of the rehab. Now, why would you rather use private versus hard money lender? The reason why is because you're going to get all this money for the purchase and the rehab upfront at closing. Okay, it's going to be recorded on the HUD. Versus if you use a hard money lender, they're going to give you the purchase price. They want you to have skin in the game, 10 to 15%. And not only that, but for the rehab, they won't give you the money up front. They're going to give it to you based on the milestones, the progress on the rehab. So you're going to need to fund the beginning of the rehab, okay? And as you progress, then you request a draw, and they're going to give you the money in partial installments. So that's the main difference between the private money lenders and hard money lenders. Now, once you use their money to purchase, rehab the property, then you have two exit strategies. You will either buy and hold or fix and flip. So if you're going to keep the property, guess what? You're going to need to pay off these outstanding loans. And this is expensive money. Typically, it's anywhere from 9 all the way to 15%, okay? The average for this is 12%. So now, how do you go about paying them off? Once you stabilize the property, meaning that you rent the property, if you're gonna do a buy and hold, okay, then you're gonna need to refinance on the back end, and that's what I'm gonna cover on number 10, okay? So you have two options to refinance or pay them off. Either you're gonna do the residential or the commercial loan, which is a long-term 30-day amortization. The primary difference between these two is that the residential is going to go in your personal FICO score, and they're going to ask you for more requirements: W-2s, tax returns for the last 2 years, bank statements, reserves, and they will have a season period of about 6 months from the time you purchase the property. So if you purchase the property in January, you won't be able to do a residential refinance until June, 6 months afterwards. However, if you go the commercial route, the seasoning period is only 3 months. So if you bought it in January, you can refinance as early as March, okay, with the commercial. Now, what's the main difference? Well, the main difference is that you can have up to 10 residential loans under your name and unlimited, infinity for commercial. So eventually you're gonna need to go commercial. Now, what about the interest rate? Here you're gonna be looking at the lowest interest rate, so somewhere in the 4s, okay? Interest rates have increased in the last month, so you're not getting 3% anymore unless you buy down the interest rate. But right now, residential is about 4.25, commercial is 5.25, okay? So it's a lot easier to do a commercial refinance, less requirements, okay? You're still gonna need to have reserves. They may ask you for your tax returns, but these will be a lot easier. The private money lenders, which you're gonna use when you buy a distressed property that needs rehab. But if you're gonna keep it for a rental, okay, Ray, can you hear me? Okay, I was just listening to myself on the recording. Perfect. Thank you, Ray, for letting me know. Okay, so now let's go over. Can you hear me now? Can you hear me okay, Ray?
Yeah, I can hear you fine now.
Does it sound okay?
Yeah, great.
Is this sound okay?
Yeah, sounds great. Very good.
Can you hear me okay now, Ray? Okay, perfect. Thank you. So now let's go over the next option. So you have conventional lending. So conventional lending applies only for retail properties. These are mostly for distressed properties that need a lot of work. But conventional lenders, those are the big banks like Chase, Bank of America. To be able to get funding from them, the property needs to be in almost moving condition, okay? And again, this is sort of like along the residential guidelines. So it's gonna be more requirements for you to get this type of funding, but this is going to be driven by the condition of the property. It has to be in good condition. But as investors, we're always looking for distressed properties that utilities might not be on and that they need a lot of work. So for those properties do not qualify. Cash, obviously if you have cash, but my suggestion is even if you have the money, you're better off by using other people's money so that you can exponentially grow doing more deals. The next one is home equity line of credit. So if you have equity in your primary residence, you can get a home equity line of credit to tap into that equity and get cash out. Okay, so that's option number 5. Option number 6, get a loan from your pension plan, IRA, or 401k. Okay, because the interest paid on these pension plans is to yourself. So this is also a great way of tapping into resources to buy real estate. The next one is a 1031 exchange. What that is when you buy a house and then let's say that you kept it for a long time, you sell it, you make a big profit, you don't want to pay taxes on the net profit. Therefore, you are going to do a 1031 exchange, which means that you're going to need to take those gains from the flip and buy another property. So the government is going to give you about 3 months or so to find a comparable property and about half a year to close on the next property. By doing that, you are pretty much not paying taxes. So it's sort of like a tax deferment mechanism. But eventually, when you sell the property, you're going to pay taxes. So that's another way to tap into cash to buy more properties. Then line of credit, okay? We're going to talk about line of credit and business credit because people get confused. What's the difference between line of credit and business credit? So line of credit is typically given by hard money lenders. What that is that they are going to take your liquidity. Let's assume that you have 50,000 in the bank and multiply that times either 3 or 5. And they're going to give you a line of credit for 150 up to 250,000. So you can buy a house for up to 250,000. That's what a line of credit is. So when you are in real estate, one of the first things that you need to do is get a line of credit from these hard money lenders so that when you're ready to make an offer, they have all your documentation on file. So underwriting is going to go a lot quicker, okay? Because through these type of sources, you can close in as little. This is the fastest. Private money lender, you can close in as little as 2 weeks, week and a half. Hard money lenders, they need to do an appraisal on the property. So typically, you can close as fast as 2.5, 3 weeks with hard money lenders. Something to mention that many people make a mistake when making offers. If you're using private money lender, you can initial cash offer, okay? But if you're getting a hard money loan, you have a mortgage, okay? So it's contingent on the bank approving the deal based on the appraisal. So when you use hard money lenders, it's not treated as cash, okay? So you have to not weigh the mortgage contingency on your contract. Super important. However, private money lending is as cash. You're just transferring somebody else's cash into the title to do the closing. So let's go back. Line of credit is a big credit card based on your liquidity. Now you have business credit. Business credit is a business credit card. That's simple. By the way, we have about 7 banks that we can give you. You can apply for a business credit card under your entity. So this is going to allow you to tap into some credit, cash advance. And what's really powerful, it does not affect your FICO score because it never goes into your personal credit, okay? And I love these. We have about 7 of them. We started with about 40,000 in credit. Now it's over 250. And it's extremely powerful. We use these credit cards to buy materials, to pay for certain type of labor. And not only that, but we can also tap into some cash advance should we need some resources for a down payment or a bond. Next, you have the residential versus commercial refinance. As I said before, once you purchase the property using private or hard money, at the end of the term, once you refinance, you need to property that you're buying, then you need to decide which way you want to go. My recommendation is, and it doesn't include going to your FICO. That's going to be a big jump. Pretty much is right. Is the sound better? Okay, is that better? Okay, I want to make sure. Okay, awesome. Thank you. I'm going to switch my camera over to this. Okay, I think this should be better. Okay, so I switch cameras. Does it sound good? Much better, perfect. Thank you, Jessica.
Much better, Hugo.
Okay, thank you. Okay, so what I wanted to, we're talking about the residential versus commercial refinance. So that happens when you stabilize the property. Once you bought it using private money, then you need to, in about 6 to 9 months, once you stabilize it, refinance using residential or commercial. My advice is go the commercial route. It's 5.5 interest rate or so versus residential. It's going to take you longer. They have the 6-month seasoning period versus commercial 3-month seasoning period. Okay, it never goes in your personal credit, and it's unlimited number of loans that you can have. Okay, so eventually at some point or another you need to go the commercial route, so why not do it now? Unless you have a jumbo loan, then you need to go the residential route. Okay, so again, I want to quickly summarize. When you are buying properties, you have about 10 options. You've got to focus on the most important ones, the ones that are very critical, which are private money and hard money. My favorite is private money because they give you, again, the money for the purchase and the rehab 100%. But the drawback is that is relationship based, is who you know. Okay, but this is the good news. In ChicagoDealVault, we have over 60,000 private money lenders. I mean, over 6,000 private money lenders. But we've done something really amazing. We created a CASHFLOW inner circle group right here. Okay, so in this group, what we're always able to do is I raise capital to fund your deal. So when you belong to the CASHFLOW inner circle group, I raised 1.5 million cash from private money lenders who are also part of the group, okay? They chose to be passive in real estate and they want to make a return on their money. So when you are part of the team, the way it works is that if you have a deal, we're gonna vet the deal. We're gonna make sure that you qualify. When it comes to giving you money, we require reserves, about 15,000 reserves, and that's about 3 months of principal, interest, tax, and insurance, and also FICO of 680 and above, okay? It's super important. The reason why is because when it comes to do the refinance on the back end, the lenders are going to ask for about 680 FICO score, okay? So that's one of the requirements they've made, and that is why we are paying close attention to your credit, okay? So let me move the camera a bit higher up. Okay, perfect. So it's super important that you have a good FICO score. We're talking about 680 and up, okay? The better the FICO, the better terms that you're gonna get. And then no issues when it comes to refinancing. And again, the rest of the sources like cash, we recommend even if you have the reserves to use other people's money in order to grow exponentially. Conventional lending is done by big banks, Chase, Bank of America, and that only applies to properties that are like in move-in ready condition. As an investor, we're looking for distressed properties, so this does not apply, conventional lending. These are for retail buyers. Cash, save your reserves, especially things are gonna reopen back up based on what I've heard by September. However, we won't see any new properties coming back into the market until next spring, summer, but you've gotta be ready. Save and stash up cash, okay? Super, super important to be able to capitalize on great deals coming down the pipe. HELOC, if you have a condo, a house with a lot of equity, you can get a home equity line of credit, tap into your equity, and get cash out. 1031 exchange, if you're selling a building, a property, and you are not going to pay taxes on your gains, you have to reinvest in the next 6 months on another property, just to defer taxes when you sell that property. Line of credit, super critical, okay? When you get into real estate, you need to reach out to a couple of harmony lenders to give you, based on your liquidity or your assets, a line of credit. They're gonna multiply it times 3 or 5, and based on that, boom, they give you a letter. You're approved for however much money to buy properties. Business credit, a must. Once you have your entity, you've got to apply for business credit cards to not only pay for materials, some kind of labor, but also you have cash advances. Should you need cash overnight for a bond for a village when you're doing a rehab or for a down payment, then tap into your cash advance from your business credit cards. And again, commercial versus residential refinance. The main difference between the two of them is that on the back end, if you're keeping the property, you need to pay off the expensive money when you refinance. Residential, lowest interest rate in the fours, commercial 5 or so interest rate, but residential, you can only have up to 10 loans, no more than 10, so you're gonna be limited. My suggestion, jumbo loans, go into residential to boost your cash. Else, go the commercial route to have unlimited loans. So it's easier, less requirements, less time as far as seasoning. Seasoning means the time from when you bought the property, right? Using a private money lender till the time you refinance. Commercial, they're gonna ask you for 3 months, which it's not a big deal. By the time you did the rehab and put it on the market to rent it, it's been 3 months. However, residential, they're asking for 6 months seasoning, okay? So they're gonna have you pay more money, carrying cost, before you can refinance. And usually they ask you for a lot of requirements, and once you're able to refinance, the process can take up to 3 months when you go the residential route, okay? Between 1 to 3 months. So it's very lengthy. Commercial, it could be just a matter of 3 weeks. So my favorite is commercial. We're doing 2 commercial refinances right now. So are there any questions on the line? I just wanted to give you a rundown on all your options when it comes to funding and the money that you have available. And the great news, right? If you belong to the CASHFLOW Inner Circle group, we can fund your deals 100%. up to 150,000 for the purchase and 50,000 for the rehab. So all in, we can give you up to 200,000 for the purchase and rehab, which is huge. So you don't need to have a personal relationship because we built that relationship with private money lenders, and they're willing to pledge their cash to fund your deals to make you more successful. So we're super, super excited about that. Are there any questions on the line?
Yeah, Hugo. So let's say I borrow the 150,000 to purchase, and then I get 50,000 for the rehab, and everything is fixed. Now I go ahead and rent it out or lease it out for 2 years. After 3 months, it's seasoned if I go with a commercial loan. Is that correct?
Perfect. Yes.
Now, at that point, when I go to the commercial loan, I have to come up with reserves.
So they want you to have, when you refinance,
Yes.
no, reserves are not important on the refinance because all they're doing is rating term. That's how they call it. So you're not doing a cash out. So all they're doing is paying off the outstanding loan. So what they do care is your FICO score and that the property has, when it appraises, 25% equity because they're going to give you a loan for 75% loan to value. So if the property appraises for 200, they're going to give you 150,000. So that 150,000 will pay off the outstanding loan.
Okay.
Does that make
so
sense?
where does the reserve comes in? From the private
Reserve
lender?
comes into the picture here on the upfront purchase, not on the back end. So on the back end, you already stabilize the property. So all you want is to turn that rehab loan into a rental loan. So for that, you don't need reserves because the property is already stable. Not only that, but it cash flows. Does that make sense?
That makes sense, yes.
Great question, Rudy. Are there any other questions?
Hey, Hugo, this is Ken. How you doing?
Oh, Ken, good, good. Thank you.
Will it be, if you're doing wholesale deals, if they could provide proof of fund letters also for those that are part of the group as well, or?
Yeah, absolutely, absolutely. So this is the thing, when you are doing wholesaling, since we're not buying the properties, you technically don't need one, but guess what? There's something that is called transactional funding, okay? So what it means is that that is applied when you are wholesaling, but you're doing a double close, okay? So you're using somebody else's money just for about an hour or so. They're gonna charge you about 1.75% of the total loan amount. And that's how you can also wholesale properties doing a double close and using transactional funding for wholesaling. But yeah, absolutely, we can also do that. We can give you a letter for transactional funding to do wholesaling. Absolutely.
Excellent, thank you.
Oh, no problem, Ken. Any other questions? Okay, please don't be shy. Any questions? Any questions that you can think of?
Oh, this is Ken again. Now, you're talking about the commercial loan. To me, out of the ones you've explained, that seem to be the better out of all of the ones you've just explained. But you said you like private money better, but the way you explained the commercial loan seemed like it was better than private money.
Okay, so let me clarify. When we purchase the property, we're using private money loan. Okay, so we're using this private money loan. So we're using the cash flow inner circle fund. Okay, I've raised 1.5 million cash. So I'm using that money to buy the properties. So I tap into 100% of the purchase, 100% of the rehab. But now we need to pay that money back, and then I need to go the commercial route. So I'm going to go with some hard money lender partners that we have that they do commercial lending on the back end. So in fact, let me pull it up on the screen. I'll show it to you. so that you guys know what I'm talking about.
Excellent. Thank you, Hugo.
No problem. So let me make the screen bigger. Okay, so we're doing two refinances right now, two properties right here, Nashville and Burnham. This is one in Lansing, the other one is in Burbank. So let me show you. Total loan amount is 290, okay? 290. So that, how did that come about? So property A, we borrow 120,000. That's in Lansing. Property B, we borrow 150,000. So that's 270. Yeah, 120, 150. So that's 270. Okay. So in here we're rolling down. I'm not sure. That's a great question. Why is the new loan 290? That's something I need to confirm on the details. But we need to pay off total of 270, okay? And this is the money for the purchase and the rehab, okay? We bought this property for 90 and rehab was 30, so we borrowed 120. Now this one we borrowed 86 for the purchase and about 70 for the rehab. So total combined we borrowed like $270,000, okay? So now when it comes time to repay, oh, right here, payoff, sorry, payoff mortgage, 270, okay? Now, what's the appraisal value on these two properties? They appraised for 375, okay? So now they're gonna lend us 77%. I mean, they're making an exception because we do a lot of business with them. Typically, they're gonna lend you 75% of the LTV. So 75% of 375. So that's gonna not only pay off the outstanding loan, but we'll be able to do a cash out. And in fact, the property is appraised for higher, not 375. They appraised for close to 390. So our cash out right here is going to be close to 8,000 or so. We're going to be able to do some cash out. Interest rate, we're looking at low 5%, but this is what they're looking for, okay? This is super important. Total monthly payment, so principal, interest, tax, and insurance, it's $2,600, well, $2,700. See how much the rents are, $4,450. So we're going to be cash flowing over 1,600 in these two properties. So when this is what they care about. How much is going to be your total monthly payment and how much is your current rents, okay? Because we need to provide leases. We need to back this up. So the cash flow is going to be really high for these two properties. So that translates into a very high debt to income ratio of 176. They're looking for ratios of at least 1.2. What it means is that we're cash flowing 76% surplus of what it takes to pay for the property. Does that make sense? So we have a surplus of 76% cash of what it takes to run the property. Typically, they're asking for 1.2, but since these two properties are cash flowing really well, I mean, the refi will take about 3 weeks or so. So we should be refinancing these two properties actually this week or maybe next week because the appraisal came back last Friday. So this is the commercial refinance. So this won't go into our personal credit. This goes into the entity, into our S corp. Does that make sense?
Yes, that makes excellent sense. Thanks for this example. Appreciate that.
Yeah, no problem. So again, when we give you money from the cash flow fund, guess what we're gonna do? We're gonna make sure that the ARV on the property is big enough so that you end up with 25% equity. Why? Because when it comes to giving the loan to, or turning the loan into a rental through the commercial program, they're going to give you 75%. So that is why we want to make sure that we give you, let's say the property will appraise for 200,000, we will give you no more than 150, right? Because we know that if it appraises for 200, the bank will only give you 150. So we need to make sure that that 150 will pay off the loan for both the purchase and the rehab. So we can give you up to 150 if the property appraises for 200,000. Why? Because of this example, right? Banks are only giving 75% LTV, loan to value, or loan to value of the loan to appraised value. Okay, so you'll end up with for sure 25% equity, and not only that, but they want to make sure that the property is going to cash flow, just like the example that I gave you. In this case, those two properties meet the cash flowing requirements or the debt coverage ratio of at least 1.2. There's another question from Tony. Hugo, what do the commercial lenders need to know about the entities in order to give us a line of credit? What factors affect the rates they change? Okay, so the requirements is your liquidity. So they're going to ask you for your pension plans, your bank statements, savings accounts, anything that shows liquid assets that can be turned into cash immediately. And they're going to multiply that times between 3 and 5, and that they're going to give you a line of credit, okay? And that's usually given by hard money lenders. And then what factors affect rates they charge? So your credit. So the better credit you have and the more experience, the better the terms they're going to give you. So like, for instance, us, they can give us more than 75%. So they're giving us 77.5. They're giving us low fives. If it's an average investor, they might get somewhere in the mid fives, so 5.5, but we're getting the lowest of the lowest. We're getting the best terms, okay? And therefore, when I refer you to our commercial lenders, you will also get the best terms, okay? But yeah, interest rates are based on your personal experience and FICO score. So please, super critical, have FICO score of 680 and above. Great question, Tony. Anybody else? Anybody else? Any questions? So now let me show you where our resources are. Let me share my screen right now. So if you go under preferred partners, right here, so we have over 27 hard money lenders right here. Over 27. So we have 2 pages, hard money lenders. So these are our preferred partners. So these are the guys right here. Institutional money, backed up by hedge funds, over 27. Reach out to every single one of them if possible and get a line of credit. So they're going to take your liquidity and multiply that times either 3 or 5 times. That's hard money lenders. In DealVault, we also have private money lenders. So we have over 6,000. Now, yeah, whoa, we have 8,700 private money lenders. So you can look them up by city, by zip code. So if you have a deal, let's say in Burbank, right? So I can find out, look, Burbank, all the private money lenders who have lent money to investors in Burbank. So I found 5 of them. So these are money with a lot of private investors with cash, a lot of cash, who've lent money to investors like you and I to do deals in Burbank. So it's that powerful, okay? So it's super, super, super cool. But guess what? Here, obviously, the trick is that you've got to build relationship with them. But you no longer need to do that, okay? If you don't know any private money lenders, that's okay. That is why we created the Cash Flow Inner Circle Group, okay? When you belong to the Cash Flow Inner Circle Group, you can tap into our cash flow fund to fund your purchase and rehab, okay? So in fact, if I show you here, we have a couple of deals that we funded. So right here under success stories, let me come up, success stories, we started this group about 2 months ago, and we funded already 2 transactions. So one of them is Brian, and the other one is Javier, okay? We funded both their transactions, purchase and rehab. Okay, so it's super, super powerful. Again, we make sure that they have a great deal, number one, and number two, that it has equity, and obviously that they have at least 680 FICO score, so that when it comes time to refinance, their loan is not going to get stuck and the money gets paid back. Okay, so if you're interested in signing up for the CashFlow Inner Circle group, this is the link. It's about, I believe, $59 per month. And what we do is we do deal reviews, deal analysis. You are part of a group, right? We're going to assign a team lead. So let me show you what the roster looks like as of today. So we have over 75 people in the group, close to 80 people, and you're going to be in a group. You're going to have a team lead. The team lead usually has more experience, is either a real estate broker or a master's student. Okay, so that's to mastermind, brainstorm, have an accountability partner that helps you analyze, brainstorm any deals. But again, we do weekly reviews. We can vet your deal. We can help you with the funding. We can help you throughout the process. And in fact, right now, we are helping fund a third member, okay, Sol Salazar. We're making sure that she closes on a wholesale deal that we were able to sell to her, okay? So it's super, super, super powerful. Want to make sure that if you're not part of this group, that you become part of it. And also, friends, super important, we are doing a conference. It's called CashFlow Conference. This is going to happen on Sunday. I'm going to put it on the chat. Super important, May 30th. And it's going to be from 9 a.m. to 5 p.m. In Oakbrook at the DoubleTree. So it's live and it's going to be virtual. Okay, so hopefully you can come. It's $39 and we have 100 spots that we are going to allow. So it's going to be super powerful because in this conference, we're going to cover pretty much all the modules of the Inner Circle Cashflow group, which are shown right here. So we're going to go over essentials for success, area selection, finding deals, deal analysis, contracts, funding, closing the deal, rehab, property management, and building a rental empire. Plus, we're going to have a VIP session on wholesaling and a speed networking event. So it's going to be extremely powerful. I want to make sure that I give it all to you. Why? Because one of the most important intangible assets that we possess is time. And I want to make sure that you take full control of your time, that you become successful today, right? So that's why I want to give all the information to you in one day, okay? Super critical that you guys come to this conference. If you're interested, please send us an email at support at ChicagoDealVault.com with the subject conference, okay? So that we get you reserved, okay? And then take advantage and learn everything in one day. So not only you're gonna have the knowledge, you're gonna get the networking experience and obviously resources. Anything that you need, we're gonna be able to help you and provide that particular day, okay? Whether it's contractors, whether it's funding, attorneys, inspectors, you name it. We're gonna make our preferred partners available to you on that day. Are there any questions? Okay, so the question is, Diane, how can we be in your group so that we can lend money? Okay, Diane, so if you're interested in lending money, okay, so you gave me your phone number and, oh, can you send us your contact information? You can either do it via private chat or send us an email to support, and then I'll give you a call tonight so that we can help you. If you have money to lend, we can help you do that, okay? Are there any other questions on the line? So Diane, so let me understand, is that what you're interested in? You're interested in lending money, or you're interested in borrowing money from the cash flow in a Chicago group? Okay, are there any other questions? Oh, lending. Okay, perfect. So we'll get in touch with you, Diane. If you can email us your phone number, or you can put it via the private chat, I'll be happy to call you, okay? So I just raised $500,000 in the last week, and some people are telling me they're gonna have more money available in the next couple of months. So my goal is to raise 5 million cash to lend to members of the Cash Flow Circle group, okay, to buy and rehab your deals. Are there any other questions on the line that I can help you answer? Absolutely, Maria. If you had issues logging in, don't worry. Either I can call you, send me your contact information, and I can give you a summary, a rundown of what we talked about today. We will also send the replay of the meeting, okay, first thing in the morning tomorrow, okay? But please make sure that you come to the cash flow conference May 30th. Please send us an email to support@chicagodealvault.com so that we reserve a spot. Are there any other questions on the line? Nicole, Ray, Nick, Rudy, Keisha, Jessica,
Yeah, I have no questions, but I will attend that conference for sure.
Perfect, Rudy. So please send us an email. Some of you came to one of the live events we did in Oak Brook. Well, this conference is going to be like 10 times better than the last event. I mean, it's going to be extremely powerful.
Looking forward to it.
Awesome, Rudy.